You may have noticed that many of my guests live their lives, or at least their professional lives, in chapters, often 3 chapters. Think about Roger Ehrenberg, right? What does he do? He starts out amazing career in investment banking, moves on to start IA, incredible career in venture capital, probably one of the top venture capitalists of all time. And then, well, he's doing a 3rd chapter, which is sports investing, which is a huge business. And his firm, Eberg Capital, is a huge part of it. Look at David Anderman. Starts off at Lucasfilm, moves on to work for SpaceX. From there, starts a venture firm called Stellar Ventures. A lot of people, 3 acts. And my guest today is no exception, Frank Rotman. Frank Rotman starts out his career basically building, or being one of the key people who built, Capital One. What's in your wallet? That would be pretty much a career for most of us, building one of the most famous financial and successful financial institutions in the United States. But no, he goes on and starts QED. Now, QED Investors is a fintech-focused venture firm. And it's a fintech-focused venture firm. He starts in 2008, before fintech-focused venture firms are a thing. How do they do? Well, they invest early in Credit Karma, SoFi, Nubank, the list goes on, any one of which is a career maker. And now he's on to his 3rd chapter. I don't want to spoil it, but let me tell you this, he's building again. So here we are, folks. Frank Rotman is one of the sharpest minds in the business when it comes to fintech. He's my guest today on Something Ventured. I hope you enjoy it. Welcome back. All right, welcome back. This is the Something Ventured podcast. I am Kent Lindstrom. I am your host. My guest today is Frank Rotman. How are you doing?
Happy to be here.
Thanks so much for doing this. Frank is I'll use his background real quick. I don't know if founder is exactly the right word, but sure, very early critical employee in building Capital One, which after that, well, you'd think that'd be enough of a career, moves on to starting QED, which is one of the most successful venture firms, I would argue. Investments like Credit Karma, Klarna, Nubank, Remitly, is on the Forbes Midas List something like 7 times. Forbes Midas List being the arbiter of who is, a good venture capitalist. Is Fintech Junkie on Twitter. I did not know that. And is now moving on, at least temporarily, from the venture capital world to a new venture, which we'll talk about. By the way, as I was just thinking about this, is venture capital like a 15-year career? I just had on, Roger Ehrenberg, and he had a whole career before he did IA Ventures at Credit Suisse, and now he's got a whole career after. I just was thinking as I was starting this, like, it seems like there's a lot of people who do build great venture firms for 15 years, but not a lot that just do 40.
Yeah, it's an interesting profession. There are a lot of ways of doing it. And, you see some of the greats in the industry have very different backgrounds. But ultimately, you're trying to convince incredible, talented founders with incredibly great ideas to take your money and to have you at their side to be advisors for the next, call it 10 to 15 years as they build their company. And in order to do that, like most people, that enter the venture capital industry, they have a career before venture capital because it's kind of the background that gives them something to offer to the founders. Right. So more times than not, you see people in venture capital, they had an act 1.
Yep.
Now, and in that first act, they either built a company or, maybe they were at a big private equity firm first, or they cut their teeth doing something else. And, that's the thing that built up the expertise that they have that goes along with the money in the platform they have in order to give to founders.
Yeah.
So like with Roger, like he had his act 1. For me, I had my act 1. For most VCs, like you can ask them what they did.
Yeah.
It's almost earned them the right to sit beside these talented founders, giving them advice. So let's say you have 10 or 15 years in that act 1, and now you're in act 2, 15 years in, you're 30 years into your career, and you've got to ask yourself, is that it? Or is there an act 3? Is there something else that you want to do? Or is this something that you could see yourself doing, well into your 60s or 70s? And, a lot of people in the venture industry will say that venture capital is a sport for the young
Mm,
because you have to be current with what's happening in the industry, the trends. You have to have been a practitioner or done something where you can give advice. But there's also a lot of travel and, a lot of wear and tear on the body because you're working around the clock, helping founders at the cadence that they built their businesses.
yeah,
So I can see why people make it a 15-year career on top of another 15-year career.
yeah,
Then the question is whether, that's it or there's an act three.
yeah. Well, and I wonder if some people don't, like, if you have a hit, like, if you do really well and you just I don't know if this hasn't happened to me yet, but, you have a hit that just makes you so much money, sort of like when Uber was in people's portfolios and, like, nothing else really mattered. And I wonder if you get to a point where that happens and you just sort of think you can't replicate it, or the thing has happened to you and you're like, I'm gonna go 5 more years with things that aren't as exciting as that."
Yeah. Yeah. I mean, it depends what drives you as a human being.
Mhm.
Is it the curiosity? Is it being alongside founders, helping them, solve very difficult problems? There are a lot of different things that drive people. And for some people, it is being on the leaderboard and it is the hits and they end on top.
Yeah,
For other people, it is the curiosity and it's being surrounded by, you know, people and interesting things. So I don't think there's a uniform answer.
yeah. So what brings you do want to talk about the emerging trends in the venture capital industry, but, going back to Capital One, you're you seem like you're studying systems engineering and math, as I understand it. How do you get from there to, like, banking, right? I mean, it seems like the young Rotman had something else in mind maybe.
Yeah. So my school was actually paid for by the Jet Propulsion Laboratory. I was actually a rocket scientist,
Yeah,
even though it's not as glorious as it sounds. I was actually a code monkey.
yeah,
So what I studied in college was applied mathematics and statistics and systems engineering. But within systems engineering, I was basically an artificial intelligence specialist.
wow,
So studying artificial intelligence in the very early days of AI, before there was compute and before there were huge pools of data that you could, train AI models on. It's a very interesting time. Um, I didn't take any finance classes in college. I
yeah,
knew nothing about business at all. But when it came to interviewing for jobs, my thesis advisor gave me the advice and said, look, you need to be very promiscuous. You need to be interviewing with lots of people at lots of companies. I'd even asked him the question about whether I should go on to higher education and get a PhD. And he said, well, the easiest way to know that is to apply and to get in and then try to imagine yourself doing that, for the next X years of your life. And my thesis advisor basically gave me the advice that the process of exploring is going to surface the answer. And in the process of exploring, I got introduced to Rich and Nigel, who are the co-founders of what became Capital One. It was actually Signet Bank at the time that we spun Capital One out of. And, Rich and Nigel were people that I spent time with, along with some of the other early guard from Signet Bank. And I could imagine myself working with them. And, they were just looking for talented people who wanted to help reinvent the credit card industry, wanted to reinvent banking. And they weren't looking for people who knew how to do it the traditional way. They were looking for talent that were willing to tackle really challenging problems and figure new ways to solve them. So for me, it was more about who I wanted to work with rather than the problems that I was working on. And I was just compelled by the people that I met through the interview process and said, well, these are just a different set of problems that I'm going to work on. And I learned it.
yeah. It's funny when people get out of college, you sort of I don't know what the solution is for this, but when you're in college, you sort of think there's sort of 3 jobs in the world or 4, you can be a banker, consultant, doctor, lawyer, and then, you don't realize there's other wealth management's a job, or there's like all kinds of crazy things out there that your sophomore self doesn't imagine. What was missing when Capital what was the problem? Like, why did Capital One become such a massive thing? Like, what did you and Nigel and all see?
Yeah, I mean the origin of Capital One was really a an invention by Rich and Nigel by staring at the credit card industry. They were actually consultants at the time, with a consulting firm called SPA, which is like a modern specialist consulting firm for the financial services industry. And, they were consulting to a lot of the big banks and basically looked at the credit card industry and said, wow, this is a really interesting industry because it is a uniform product across the entire industry. At the time, there only was one product. It was a 19.8% interest rate with a $20 annual fee. All the credit limits were about the same. Everything was either Visa or MasterCard. It was all exactly the same. And it didn't matter whether it was a Citibank card, or it was a Chase card or, any of the cards that were out there at the time. So, they looked at the industry and they looked at the evolution of what was happening and said, there should be a better way of doing this. Not everyone should get the same product. People who are riskier should have higher price and people who are less risky should have lower price. Not everyone should pay an annual fee. And they realized that there is a delivery mechanism for testing called direct mail, where what you put in one person's mailbox could be different than what you put in another person's mailbox. So you actually could test and you could say, well, if I put this offer into these people's mailboxes, how do they respond? And then how do they behave on the back end? And credit cards weren't things that people talked about actively. It was in your wallet. So you could have a very different product than someone else and you would never know it. So it was almost like the perfect ecosystem for experimentation using data and running the scientific methodology into the industry that had a single product going out to every customer seemed like a really interesting strategy. So Rich and Nigel called it the information-based strategy. They tried to sell the concept to a bunch of different banks. They got turned down by all of them except for Signet Bank. Signet Bank basically said, we want you to come build this for us, not just as consultants, but come build it, come work for us. They decided to leave SPA to go do that. Then they started hiring talent to say, we're going to build data warehouses, which were the first data warehouses ever built in the financial service industry.
Right.
And really conduct this scientific experiment to figure out how to get the right product into the right hands, of the right consumer at the right time through the right channel. Like it was all about customizing the product.
Yeah.
And, that just sounded very interesting to me, someone who was very math and science and engineering focused, all about optimization, systems engineering and artificial intelligence. It just seemed like a perfect place to experiment.
Yeah. Well, it certainly worked out. So at what point do you say, okay, well, we've really created something here. This is working. I'm leaving to, stop building, not continue building something. I'm going to start investing and investing in fintech too, which at the time, I don't know if specialty funds are now probably too hot, but at the time that probably wasn't a thing, like fintech funds.
Yeah. So Nigel left in 2004 and I left in 2005. Capital One had gotten large.
Yeah.
And so it started off as a very small startup-y type thing. In fact, it was arguably one of the first fintechs, a fintech of the 1990s,
Right.
Before fintech was a thing. And from taking it from a single product into a multi-product company, from a single segment into multi-segment, single geography into multi-geography, like it evolved over a long period of time. And before you know it, you have 40,000 people working at this international company where you have regulators, basically having conference rooms named after them because they're in your offices all the time.
Right. Right.
It's just not the same entity. Now, I love Capital One. I love what's been built. It's still a very modern and progressive organization. I mean, one of the most modern banks. But it didn't feel very startup-y anymore.
Yeah.
And, I found myself trying to get things done within the organization, and the machinery didn't want those things done.
Yeah.
Right? The machinery slowed things down and was blocking things. And at that point, like either you adopt to the machinery or you go do something else.
Yeah.
Nigel left, like I said, in 2004. I left in 2005. I actually left to build a student lending company. Did that for a number of years and really, tried my hand at building something from the ground up. And it was amazing watching the growth of this entity from nothing into the third largest student lender in the country in just a number of years. But then I joined back up with Nigel,
Yeah.
and, we formed QED Investors, to be on the investing side of the house, which was really more about helping young founders take their ideas and help them, kink the curve on outcomes, right? Figure out how to crack the code to be back in startup mode at all times. So it was really a chance to take what we learned as operators and help lots of people instead of just doing it once or twice in our careers.
Yeah. It's an interesting thing in Silicon Valley. The thing where you work with somebody and it clicks. And it doesn't always click because you're the same person. Andreessen and Horowitz are not the same guy, for example. And you say, there's something about this relationship that really works. We're going to do another thing together. What was that like for you and Nigel? I assume I don't know him, but I assume he's a different guy from you, and you guys kind of complete two parts of something for this to work as well as it has.
Yeah, I mean, Nigel and I have a 31-year working relationship together, so it's a long-standing relationship. I joke, but he's been the only constant in my adult life.
Yeah.
So something worked,
Yeah.
and worked incredibly well. I mean, we had two very interesting acts together. Arguably building two things that succeeded quite well. But we are very different people. Nigel is very expansionist. I'm very reductionist. I like working on fewer things. He likes working on more things, and it's a great balance. He's always been the one to expand people's set of possibilities, right? Get people thinking about how large could large be? What happens if you succeed? Why aren't we doing more? The opportunity is out there. Should we seize it? Yes or no? Like he
Right.
really has that expansionist mindset, which is great for, building out a business and, becoming, almost manifest destiny, like growing into the skills that you have and helping the ecosystem as much as you can. Um, I'm a bit more about tackling fewer things much deeper and, understanding them at the atomic level and being able to break things down into the, atomic code about how they work and then building them back up with frameworks that, help describe why they should work and how they should work. And in some ways cracking the code on the business models.
Yeah.
So it's just been a great partnership over the years, and, we kind of have fit well together.
Yeah, you guys, you had crazy success. I mean, a lot of venture capitalists I talk to have one big hit, and that's amazing. It's one more than everybody else. But you just had, there's a few guys like Elad Gil, where you're just like, it's just one after another. And you guys have sort of one after another after another. Is there anything to being so expert as you guys are in fintech that you miss opportunities? Like that you look at something, you go, well, that won't, like, I know so much about this, that won't work. Like, I'm not going to invest in PayPal because that's illegal, basically. Like, do you need to be like kind of a more
It
wide-eyed
is
venture capitalist?
it is a double-edged sword.
Yeah.
Um, so being an expert in a space does help you see around corners. It does help you avoid mistakes. But it makes it harder to suspend, you know, the better judgment in you to allow an entrepreneur to do things they have no business being able to do.
Right.
Right. And sometimes that's where the biggest businesses come from. So there are a few misses that we have where I can absolutely tell you they had no business building what they built. Right. Or
Yep.
something fell into place that should not have fallen in place,
Right.
but it did. Right. And sometimes that's the magic of an entrepreneur. And sometimes that's the magic of an investor that in some ways, by being a bit ignorant,
Yeah.
it gives you the surface area to do things that you shouldn't do. So one of our biggest successes that, I helped in the very early days, but Nigel and some of the other people on the team spent a lot more time with the company. But a company called Nubank, which is now arguably one of the most successful companies in all of Latin America, one of the best startups I don't know its market cap right now, but a $60-70 billion market cap,
Yeah.
public company serving 120 million, customers in the Latin America region. And, we were one of the first checks in with Sequoia. And actually, I'd spent a lot of time with David Velez back when he was at before he was at Sequoia, he was at General Atlantic. When he was at General Atlantic, I was on some diligence teams with them, flying around South and Central America, looking at fintechs together. So I had known him a very long time. And, I've been asked many times over the years, like, how did you get comfortable investing in this thing in Brazil with all of the risk in Latin America? And it ends up that the reason why we invested in David and the reason why we invested in Nubank very early on was because we knew a lot about credit cards, but
Right.
we didn't know a lot about Latin America. And I hate to say it, but we actually didn't even underwrite Latin America. So by not knowing anything about Latin America and by not underwriting like the risk of Latin America and being there before there was capital and all this other stuff, we didn't have to suspend disbelief. We didn't have to actually overcome another set of objections. We just never actually considered it. It's almost ignorance.
Right.
So people say, how did you get over the Latin America thing? I said, I don't know. I never really looked at it, never really thought about it.
Right.
I'm thinking more about building a credit card company, which is something that we knew a lot about. And
Yeah.
David, who we had known for a very long time. So again, it's an example where if we had actually done all of the work and had full knowledge about the risk we were taking on,
Yeah.
we would have missed it. Maybe we would have gotten gunshot. So sometimes knowing a little bit less can be powerful.
Yeah, it's funny thinking back to, what was the Steve Ballmer Microsoft thing? Like, why would anybody want a computer at home? I was involved in, early in the social networking thing. And when social networks started, it was pretty canonical from VCs. Like, nobody is ever going to put a real picture of themselves on the internet. Like, complete confidence, nobody was going to do that. Or when Uber came along, like, I ain't hopping in a stranger's car. And of course, it's all just all just kind of a failure of imagination for people. Um, so as you're building QED and it starts working, you sort of became a thought leader on Twitter. You've like ideas. Like what kind of led you to write? I mean, whether it's a book or tweets or they're pretty hefty ideas. They're not just hot takes on, the market's going up or down tomorrow or this guy sucks. They're, some pretty robust ideas.
Yeah. I mean, in order to be successful in venture capital, you have to actually have a superpower, right? Like if you don't have a superpower, I mean, I've said this before, the venture capital job is a very easy job to do poorly and a very difficult job to do well.
Yeah.
It gets a lot of criticism and actually for the right reasons. There is a lot of sloppy money being thrown around. And if you're wielding a checkbook, it's a very easy thing to write checks.
Yeah.
Plenty of companies out there. The base of the pyramid is so broad. I mean, it's almost limitless that you could write checks all day and, you'd run out of money before you run out of companies. So in order to be successful, like you have to have a superpower. And, the superpower that, I kind of built up over the years was, as I mentioned, being able to learn things, being able to break them down to their atomic components and being able to build them back up and describe them in a way that people could understand them better. Right. So
Yep.
whether it was a complex payment process or, it was the Web3 in the world of crypto, or it's about core banking, like there are people who kind of sort of understand it. But when you start probing, they only know it at the surface level, or they only know it to a certain number of questions deep, and then they exhaust their knowledge.
Right.
And the superpower that I built was the ability to go deeper than most people, but then be able to abstract it and bring it back up so that people could understand things and I could help explain it. So I found that in helping to build QED, this superpower was incredibly valuable to other VCs and it was incredibly valuable to founders because I would have a single conversation with them and they would say, you now understand my business. I think you understand my business as good or better than I do. And definitely as good or better than anyone else that I've talked to in the VC space. And I kind of became known for the guy to go to if you really want deep thoughts about a business model, right? Things you might not have thought about or different ways of assembling the business and understanding the core problem. And this is very valuable when fintech was a very small thing, right? Because there were only a small number of founders. There were a very few number of VCs that were actually interested in fintech type businesses. So I was able to get to all of the founders and all of the VCs pretty effective. But then fintech became a thing,
Right.
right? I mean, I think of it as the art of discovery. Like once something has been discovered, you can't unsee it.
Right.
And once the VCs have seen it, and once founders have seen what success looks like, money just starts pouring in,
Yeah.
right? Founders start founding businesses, money starts pouring in to fund those businesses, and then fintech became a real thing. And unfortunately, I didn't like it as much because now I didn't know who everyone was.
Right.
And it was hard to keep track of all of these businesses that were being created. So I came to the conclusion that the strategy had to shift. And instead of me knowing who everyone was and then having a value proposition that was very obvious and very valuable to them, I had to find a way for everyone to know who I was because there's just too many people out there, too many companies and too many VCs.
Hmm.
The formation of these early stage companies was just happening at a crazy pace. So the easiest way to do that was to become a thought leader and take the conversations that I was having in private and making them public,
Yep.
right? Taking these things that I discussed with founders and, I would have the same conversation two, three, four times about a particular topic or about, a particular way of cracking the code on a business or about how to make decisions. And I realized that if I packaged it and, put it out into the world, people would get to know who I was. And then they would have a bias that they would want to get to know who I am so that I could apply that same thinking to the thing they care about most, which is their business. And it worked.
Yeah.
Right? So I put content out there and people would reach out and say, wow, like I'd love to get to this person because he's thinking about my problem or he's thinking about similar things. I'd love him to comment on my business. I'd like to spend time with him.
Yeah.
So it became a magnet and
So,
it's become very valuable.
yeah. So into this mix comes crypto. I'm curious what you think about that piece of, whether it's fintech or not, and then sort of how that plays into. You've talked about like the world, whether changing or always been like a zero sum world and financial nihilism. Those seem like really pretty cerebral topics.
Yes. So, not everything that I write about immediately leads to a problem statement and a solution statement that you throw capital at to build a business.
Yeah.
Some of them are broader observations about how the world is working.
Yeah.
And that context can be very valuable over time. Sometimes it does lead directly to an aha or a business model, but sometimes it's just important context.
Yeah.
And, I have been writing quite a bit about the zero sum world and about financial nihilism. In this new world that I'm entering into where I'm back in founder mode and going to be building businesses, these are some areas that I'm spending quite a bit of time to see if there are solutions that I want to build in the space.
Right.
And I will be looking for some founders to co-found some things with kind of in that same space. But, sometimes you just have to write about what interests you
Yeah.
and what other people find interesting. And, I find some of these more generalist takes on how the world is evolving are quite interesting. And they are leading in my mind to eventual businesses.
Yeah. And what is the financial nihilism piece? I was just kind of fascinated by that one. And in particular, I don't know if this is related, but just the sort of the moment you had Bitcoin kind of comes to mind where you sort of like you work really hard and you sort of save money and you buy an S&P index fund and you get a mortgage and you pay it down and then you get a certain net worth. And then there's some guy who like, I don't know, just bought 1,000 Bitcoin when they were 10 cents and he's wealthier than you'll ever be. And you just kind of like, you're like, I know I can't do it, but damn,
Yeah.
that seems easier than the way I did it.
Yeah, unfortunately, comparison is the easiest way to make yourself unhappy.
Yeah.
But to talk about it in a broader context of financial nihilism, there's a concept that I, kind of developed and wrote a bit about in the past year. That if I have to collapse the whole thing, it's the concept that if someone is playing a game and they've determined that they've already lost the game, then any move that they make is actually a rational move from that point forward.
Hmm.
And this is a pretty profound concept. Like I think about it as, P when P win equals zero. So P and then in parentheses win. So the probability of winning, right? So the day I've determined that the probability of winning the game I'm playing is zero,
Yep.
then any move I make is rational. And if you think about the game of life, the game that people are playing when it comes to their financial health and wellness, a lot of people have determined, whether they're right or wrong, that if they play by the rules as they're written, they can't win,
Right.
right? So what are the rules? Well, the rules are to go to school, get good grades, find a career for yourself or go to college to figure out what that career is going to be, get a job, settle down, get an apartment, eventually buy a house, stay at that job for a certain number of years. Like it's a very traditional mindset. But if you play this game, a lot of people have a counter narrative that says, I'm doing all of those things, but I'm still struggling.
Yeah.
Right. I did all of those things and now I'm $150,000 in debt because of student loans. I did all of those things and now I barely make enough money that I can pay my rent and I struggle to go out on the weekends to even date without struggling to pay for dinner, right? Which should not be a problem for someone in their 20s.
Right.
They are employed at a good job. They shouldn't worry about, the cost of actually going out and dating. Like that's just a normal thing people should be able to afford in life. The ability to actually save money, so that you can start building up a nest egg towards retirement, right? The concept that you need to save early in your career to let compounding actually do its job so that you put money in vehicles that are outpacing inflation so that eventually you have a nest egg that you can draw 4% a year from, in order to afford your life. Like that whole financial theory is broken.
Yeah.
It just doesn't work for the typical person anymore,
Yeah.
right? There are too many counter narratives that say it's just impossible for people to live a life with any joy in it, which by the way is not a fantasy standard, right? Having some joy in your life,
Right.
such that you actually can end up seeing your path to a retirement where, you're not struggling.
Right.
Doesn't work,
Yeah.
right? And that's where financial nihilism comes from. Like people have determined that P win equals zero.
Right.
So you see them doing a bunch of things that on the surface look irrational, but it's perfectly rational from their perspective if they think they've already lost the game. So why are they opening up a Robinhood account and then investing in incredibly high risk same day settlement option trades?
Right.
Right? Like what is the purpose of that?
Right.
What is the purpose of investing in a meme coin where you can press a button and the chances are that you've now bought something that's going to zero?
Right.
But there is a chance that I press that button and tomorrow I'm independently wealthy. And if that's true, my life has changed.
Right.
Right. And if I thought that probability of winning equals zero, pressing that button is more rational than not pressing that button. Right. So you really have to think about all of these decisions. And by the way, it's not just in financial services or in financial theory, it's in other parts of life as well. If you think that, by voting for the people you're voting for, you're going to get a society that, does not help you win,
Right.
then you're going to vote for the other guy,
Yep.
right? It doesn't matter if it's irrational for you to vote for the other candidate because the other candidate might immediately make your life worse. But if you've determined that by voting for whoever the quote unquote right candidate is, your life is destroyed because it doesn't work,
Right.
then the other choice actually is a rational choice. So you're seeing this everywhere in life. You're also seeing games that people are playing where they feel like it's, PvE. So person versus everyone,
Mhm.
right? Like people are now playing games where they're like, look, everyone can't win. So I'm going to play for me to win. And it means potentially sacrificing ethics, sacrificing values, um, not caring about your common man, not caring about the total pie and only caring about your piece of it. So there are a lot of behaviors that have emerged because people believe that P win equals zero.
Yeah. I have a funny, in business school, I had a class and I had a professor who had played this game, and he said it always had the same outcome. You had a red team and a blue team, and you'd trade cards or something, and then the rules would change. And the punchline was the rules would change such that the blue team would realize they could never win. Like you just wouldn't win. And the prize for winning was a bottle of champagne. And every time what happened is at some point when the blue team realized they couldn't win, somebody just went and like blew up the whole game and just stole the bottle of champagne and ran out of the class. It's like it happened every time. Every time people realize that the game is just unfair and they can't win and they're just playing out Monopoly where it's over an hour before it's over, they would always upset the game board and steal the bottle of champagne.
Yeah.
So,
But I mean, it's just another example of if you've determined that you're going to lose, any move you make is rational.
yeah. It's so fascinating. So speaking of rational, so you observe the VC industry over some period, and here we are with a couple of forces blowing back and forth. I wonder what you think of them. There's too much money in venture capital. There's that narrative. There's too many people in venture capital. There's that narrative. There's companies are going to be $1 trillion companies. They don't need any money. We've heard this one a lot of times through history. You don't need any money to start a company. One guy can start $1 trillion company and do it all with AI. What do you make of what's going on in venture capital? Is it different this time, or is it just another spin of the cycle?
Yeah. I mean, look, it's very difficult for people to internalize, but multiple things can be true at the same time. And I think we're in an industry right now where like generational companies are going to be born that have market caps that are just extraordinary. And if you're a venture capitalist, you want to exist at a time. You want to be investing at a time when generational companies are being created, right? And then you have to win them and you have to, invest enough money for make a difference relative to the size of your fund. But if there aren't generational companies being born, then venture capital doesn't work. And if they are being born, it theoretically can work. But I say theoretically because the other thing can be true at the same time, where in pursuit of those generational companies, money could be lit on fire. And a lot of that's happening as well, right? Because kind of if you think about it as the gold rush or gold fever, when there's gold fever out there, like people are out there mining for gold.
Hmm.
And there could be too many gold miners and they could be mining in the wrong places and they just have gold fever. And they see the fact that if they just can invest in the right company at the right time, like it can make their careers, it could make them super wealthy, it could, whatever their goals are, like it's out there. They just have to find it. The problem is when there's too much money and there are too many people and money is being incinerated, you could be playing a game where you're not getting the proper odds relative to the outcomes,
Hmm.
right? So for a lot of people, I've talked to a number of venture capitalists, and this analogy lands, quite well with them. It's almost like sitting down at a roulette table where there are 38 numbers and you're getting 15 to 1 odds,
Right.
right? Like if you hit your 15 to 1 odds, like you've done well with your capital,
Right.
right? But you're only getting 15 to 1 odds. You can't calculate it. Like that's the problem in venture capital. If you could calculate it, it would move towards rationality, but you can't calculate it. And because you have a right-hand tail that is nearly unlimited, you can justify almost anything saying this is a generational company. The problem is most of them aren't,
Right.
right? And, now you have questions about, are there going to be any moats? Are there going to be any barriers to any of the companies that rocket to hundreds of millions of dollars of revenue? Like, if they can do it, like, can someone overtake them and unseat them? Like, how are they going to be a generational, company that lasts the test of time? So there are a lot of unknowns out there, and, capital is not getting paid for the unknowns anymore. So, yes, like, to win a game when you're getting the wrong odds means you need to be that much more skilled at picking, that much more skilled at allocating your assets correctly, right? But you're getting the wrong price. Like,
Right.
that is absolutely clear to the people who are out there in the world. And any of the venture capitalists who say that they're getting the proper price for the value, they just believe that they're better pickers. They
Yeah.
believe that they are, able to differentiate things that, let's just say, the more honest VCs would shrug their shoulders and say, wow, like, this isn't what I should be getting paid, but this is the game that's on the field,
Yeah.
right? And I have the money and I have to play the game that's on the field.
Yeah. So on we go. You're moving on to a new career. I couldn't possibly have heard correctly. Is music involved in this new career?
So the new career is actually being back in the builder seat.
Hmm.
So after 17 years as a venture capitalist, um, I kept asking myself, like, is the advice that I'm giving any good anymore? The itch in me to be a founder and to see the advice actually played out and to take the ideas that I had built up over a number of years and see them kind of put into the world had been overwhelming me for a while. And, I've always approached even the world of venture capital through an operator's mindset. So we would write checks into companies, but then we would tuck our paperwork away. And my job was to help the founder figure out what to do tomorrow, right? Like, sit in their seat and act as an asset allocator with them, figuring out what projects they should be working on, what people they should be hiring, what agenda they should have. Like, I really was like sitting in the founder seat. And if you ever were to interview anyone who I've worked with, like, I was that venture capitalist who really acted as an operator. So for me, like, I'm 54 years old and I kind of was staring in the mirror and said, like, if I'm ever going to get back to being a founder, like, I eventually have to just bite the bullet and do it. There's
Hmm.
never a convenient time. I have these ideas. Um, I still feel young, except when I wake up in the morning and my back hurts. It tells me every single day I'm 54, not
Yeah.
24. Um, so I just decided that the next phase in my life was going to be about getting back into founder mode. But instead of just founding a single thing, the goal is really to have a holding company where I spin up, maybe one thing a year. This is not meant to be a factory. It's not meant to be a giant studio where, you loosely touch every single business and you just give them advice and, some capital. It really is about being a founder of these ideas, finding a co-founder to work with and, being there, rolling up my sleeves, building.
Yeah.
And it so happens that the first idea is in music. Um, I sat on the board of a music company for a number of years and saw a lot of the problems in the industry and decided that I'm crazy enough to actually tackle something that everyone is telling me I'm nuts to actually tackle.
Right.
But that's the fun, right? I mean, that's the fun in, being an outsider looking at something through different lenses.
Yeah.
So there are a number of ideas. A few of them are in the fintech space that I'm loosely working on in the background right now. Working on getting my website up and running for my holding company, and then, eventually announcing some of the verticals that I'm going to be paying attention to and working on, including financial nihilism and some of the
Yeah.
things that I've been writing a lot about. So I'll be probably announcing that in the next month or so when my website's ready.
That's great. What do you like? What's your assessment of the music industry? Like, it's gone through, from Napster to today, it's gone through that whole, transition to digital, and, live performances have become some different thing than maybe they were 20 years ago. What's your sense?
Yeah, it's a very complex and broken industry in a lot of ways. But at the same time, it's an industry that people could not imagine living without.
Yeah.
I mean, imagine living life without music. It's almost inconceivable.
Yeah.
It's so ingrained in our lives, and it's as important as ever, right? So when people are young, like, music helps them form their identities.
Right.
It helps them make connections. It helps with, processing big emotional events in people's lives. Like, music is foundational to how we live our lives.
Yeah.
And unfortunately, because of the digitization of music and the ability to actually, move it around in containers that are uncontrollable,
Right.
it made it such that a single person could buy um, a piece of music and then be able to distribute it an infinite number of times in a lossless way without anyone being able to control it.
Yeah.
That's a very, very difficult thing to internalize if you're an outsider about how uh, impactful that was on the entire industry, right? If you can't control the distribution of your product, makes it very difficult to monetize in a fair exchange of value,
Right.
right? And the Napster moment really proved that. A
Yeah.
single person could buy music, stick it on a server, and then everyone around the world who was logged in had access to that music on any device with a single login.
Yeah.
So the industry has been, slowly clawing its way back from that Napster moment. Streaming has, you know, done some wonderful things for the industry, but it's an innovation that's caused its own issues, right? And I'll be talking more about this in public soon.
Yeah.
But music to a lot of people has become a utility,
Yeah.
and they consume it like a utility. And there's another form of consumption which is much more active,
Yeah.
which is live concerts, and the value exchange there is quite different. So there are different ways of consuming music, but I'm hoping to add to the mix and
Yeah.
create new ways of consuming music.
Yeah. The Spotify thing is kind of crazy. From when I was a kid, when you would buy a single album and experience a single album for kids was a thing that you put on a record player and listen to. And you kind of go through it in the order that they put it together, and you'd read the lyrics on the thing and all that. To now, where I'm like, I want to listen to this that James Taylor song I haven't heard. I'll just listen to that. Oh, new Broadway show. I'll just click over, see if I like it. Boom, boom. But like, just the fact that you can run through anything in the canon on any given day, very cool on the one hand. Well, on the other hand, not the same romantic experience as like, I just got the new album. I'm spending the afternoon listening to it.
Yeah. Again, this is something I will be coming clean with and talking more about soon.
Can't wait.
But it's at the heart of the issue in the music space. Again, it's as if not more important to people's lives than it's ever been.
Yeah.
But the forms of consumption and the ways of paying for the value exchange is very different than it was historically.
Yeah. I would argue too that YouTube has changed the live show. We go to live shows in San Francisco because we have a bunch of venues like the Fillmore, the Warfield, et cetera. And if you like a band, what you realize is some bands, it's just the four guys playing their song. And you may or may not want to do that. But with YouTube, you can go see what the performance looks like before you go. So it's become our mode now to go, I think I want to see that band, but are they entertaining live or not? And sometimes we look at them, we love this band, but they're not fun live. And then sometimes we'll see somebody in Jacob Collier or whatever it is. We're like, oh, we got to go see that live. So
Mhm.
kind of a interesting turn of the wheel there too.
Yeah, more on that soon.
All right. How do people find this? Has been fantastic, by the way. And are you excited? It seems like you're pretty excited about what you're moving on to here. I mean, QED was great, but this seems really cool.
Yeah, I mean, in my blood is building. It's been the constant through the entire story arc of my career is that I like cracking the code on things. I like building things. If I'm honest, I think I'm a better operator than I am an investor.
Wow.
So getting back into the operating mode is going to be very interesting, especially with the new ways of building today with AI and the ability to ship code faster than ever. And, it's going to be interesting to kind of dust off, what was old, but then try to apply what's new to it. And,
Yeah.
this world of AI that I've been thinking about ever since college, is now
Yeah.
real.
That could turn into something.
Yeah. So I am very excited about it. And,
That's great.
I think the world will find out more about it soon.
That's great. So how do people find you? Well, for now, how do they find you? And how do they find you in the the future when you start making these announcements?
Um, well, when the announcement comes out, the name of my holding company will become public and the website will be there for it. Right now, I'm still easy to get. Fintech Junkie is kind of my handle on Twitter. Pretty promiscuously out there writing and talking to people and constantly engaging with the community. And then my current email of frank at qedinvestors.com is still active and, very easy to get me there.
Fantastic. All right. Thanks so much for doing this.
Happy to be here.
Frank Rotman has been my guest. This has been the Something Measured podcast. Talk to you next time.